We must be live. What's up, guys? Hope you have a great day. Let's go ahead. We have a new week on the stock market. We have a new week anyway. So I wish you a great week ahead. And we have a lot to talk about as always. So let's go ahead and jump in. Let me adjust my screen. Give me 10 seconds. And let's start. We have a lot of news to see and talk about. Many things happened during the weekend. We saw that big dip with very low liquidity, with the high liquidations from everyone who had, because the open interest in the crypto market was really high. And when the price dropped below a certain point, then the one liquidation led to another. And we dipped all the way from 50 plus K, 59K to 55 to 52 and to 48. And we even reached 42K, which was insane. And I hope you took advantage of this dip because I did. I did just a bit. I bought today again at 47.6K. And we'll probably spend some time here too. The last bull market, the 2017 bull market, we had like 4 or 5 dips, 4 or 5 corrections that were 30 to 40% minimum. So what makes you think that we won't have those dips again during this bull market? Of course we'll have them. Anyway, let me check if the live is going well. Yeah, the live is working, everything is good, great connection. So let's go ahead and move on. And so we will have the same dips this time as well. Nothing has changed. The market doesn't change. And in fact, you could say that some might say that these dips might be smaller, that we may not see 40% dips again, but we just saw one. So I doubt that we won't see bigger dips. I think as long as Bitcoin is below 5 trillion, we will see dips that big. We will see corrections that big. So I don't worry. I focus on the long term. And long term, the asset price of Bitcoin and the crypto market cap in general will keep climbing up. So if you invest in sound projects, if you invest in Bitcoin, Ethereum, like BNB, Binance, I trust Binance a lot. If you invest in even ADA, even though I'm not that big of a fan of ADA, I have a position on ADA, but I'm not a huge fan of it. If you invest in sound cryptos, in good projects, time is on your side. And as long as you don't sell, you will come out on the other side of the beach. Anyway, Bitcoin right now sitting at 48.3K. Ethereum is at 4K right now. Ethereum is very strong, didn't even dip a lot. Right now it's at 479 billion market cap. Bitcoin is almost a 900 billion market cap, dropped below the 1 trillion line, the line in the sand. ADA, on the other hand, is at 43 billion. The ADA dropped a lot. ADA was 65 plus billion of market cap, and now it has dropped a ton. And I don't know what might happen. We'll probably see a relief rally after a while for ADA. Anyway, I don't worry about ADA that much though. I don't think it's one of those projects that can go to zero, but no one knows at the end of the day. So who am I to say? AVAX, with an all-time high of around 140, is right now sitting at $81 per AVAX. We have Shiba Inu, which no one cares about. Then we have Uniswap at 15. Uniswap has risen a lot through the ranks of the crypto market. Chainlink dropping even more. Oh my god. Chainlink right now with an 8 billion market cap at $18. Does that mean I sell? Does that mean that I'm selling my Chainlink? No, I'm not selling my Chainlink. But this is sad. This is sad, and probably it's probably making a lot of Chainlink investors and Chainlink and Link Marines, as they are called, very, very sad. I don't let this phase me though. I don't worry, it doesn't matter that much for the long term. Chainlink is a good project that connects the outside world with the blockchain and the smart contracts. VeChain is a good project as well on the e-commerce side of the crypto market that I believe will, let me say that in a way, I believe will appreciate throughout time. But as long as Bitcoin is below its bull market support band, every single project in the crypto market will suffer, and VET will suffer among those projects as well. Where is my? I'm looking for my. headset, but anyway. Let's move on. H bar 0.25 cents. Nothing else interesting here. FTX token is at $41 with a 5 billion market cap. Okay. Let's move on. What else do we have here? I want to check. Some people care a lot about Gala. Gala is an interesting coin for some. BTT is right now having a small rise somehow, some way. But yeah, BTT. I'm looking for ENS. ENS is a great project that not many people talk about, and I believe can 10x throughout time if we give it enough time. So, and right now it's sitting at $44. Went all the way to 120, then to 80, and right now it's having a small dip. But I believe it will come out on the other side because the fundamentals of this project, like it's a governance token at the end of the day, but its fundamentals keep getting better. Like the integrations of ENS keep growing. The how are they called? Give me a minute. Basically, every metric that is important for ENS is growing. So I believe the price of the token will grow throughout time. I'm opening here Twitter. It's loading. Check this out. Some ENS news from a dev of ENS. He says ENS currently has 333 integrations we are aware of. That's 87 integrations away from having 420. I think we could make that happen by the end of the 2021. Look at this. ENS already has 500,000, 6K basically names. And is one of the best naming standards in the crypto market, and 207 owners. That means each owner has more than one name. Anyway, I think it will grow along with the crypto market in general. Peter, we have a new tweet from Peter Schiff. Bitcoin pumpers claim that Bitcoin is a better store of value than gold because its price is risen more than gold's price. By that logic, Ethereum is a better store of value than Bitcoin. If Bitcoin is gold 2.0, then Ether is Bitcoin 2.0. Has Ethereum already disrupted Bitcoin? He has a point here. Believe it or not, he has a point. Ethereum is a utility token. It has real fundamental value. One must buy Ethereum to pay for fees in order to execute contractual agreements without a middleman. I think it also operates as money on the network. SAOV, I don't know what that means. Shirley Peters getting behind ETH. It can put gold on chain. Nice. If there are no middlemen, then why are there fees? Not only fees, but absurdly high fees. Fees are paid to those securing the networking. Millions of nodes validators. This is a very different type of middleman to the usual. Permissionless, executed seamlessly, decentralized, etc. Fees are lower on the L2. Needs high fees in order to be able to secure the network. So not only is there a middleman, but there are actually millions of middlemen. Yes, if you want to call them middleman, obviously very different. That's a nice thread actually from Max. And nice comments from Max. Actually very good comments from Max. I'm very happy he's commenting here. Max is an investor as well and a YouTuber as well. You can find him on YouTube typing Max Invests. You'll find his channel. Ethereum is nothing like Bitcoin. By the way, I highly recommend that you subscribe to Max Invests. That's his name. Ethereum is nothing like Bitcoin. By the way, how's Dogecoin doing? You've got to explain to your dad that these cryptos have considerable differences and serve different use cases. Where is that I find myself agreeing with Peter Schiff? Old man yells at Bitcoin. Anyway, that was a tweet. I told you about the ENS. The ENS coin, which I wanted to show you its fundamentals. Let me go ahead and see if the live is going well. Yeah, the live is going well. So let's move on. What do we have here? We checked the market, the crypto market. Let's go ahead and check that's the wrong page. Let's go ahead and check CNBC. The market is about to open in 25 minutes. I think many of us are eager to see what happens today and what happens this week because we had a tough week. Last week was a tough week. We had a big dip on Friday. A lot of stocks struggled. Many of them were down 5 to 10%, and a lot of people are eager to see what will happen this time around. Let's see what gold is doing, if anything ever loads on effing CNBC. So EU opens green. EU opened green. That's interesting. That's interesting. I didn't expect that. Gold is flat as always. Silver dropping. And let's check if it shows the US. Doesn't show the futures. So we will go to Yahoo Finance since CNBC doesn't show us the futures. I hope you all guys had a great day, by the way. Had a nice weekend to prepare and study for this week. So this S&P futures are up 0.4%. I wonder whether they will turn in 25 minutes to the downside or not. Dow Jones is sitting at 0.7% and Nasdaq is flat to negative. Russell is up 1%. That's interesting. That's interesting. It would be great if actually. I still believe that we should have an inflation rally, like the asset prices, the stock prices should keep going up because of the inflation that we have, which is high. It's very high, actually. Someone might say that they have already risen to those prices and now they're coming down to correct. I don't think so. I don't believe so because inflation keeps on going. They still haven't tapered that much. They still haven't raised the interest rates that much, and we still have the printing. We have more than 40% of the total money supply being printed over the last 2 years. So this is extra liquidity in the market. And where will it go? It will go on all those assets. The S&P, the Nasdaq, the Dow. Every time you invest in the S&P, all those big companies get a piece of what we're investing in. So yeah, anyway, let's check the pre-market prices of some stocks. Let's open Yahoo Finance here, where I have my stocks ready, so I'll just open them and we go ahead and see what's up. We had 4 viewers today. I hope they'll sit around and see more of the episode later. Apple, Apple is pushing up. Probably all of the S&P is up 1%, 163.5. Incredibly strong Apple. Let me check what other news we have. Bob Dole dies at 98, leaving lasting legacies on Social Security and food assistance. Costco wholesale reports earnings this week. Okay. Let me go ahead and check the prices of my favorite stocks pre-market. So we have Foot Locker, we have Intel, we have Google, Alibaba, Nvidia, AMD, Costco, Apple. We saw Apple already, so let's move on. Facebook will probably have a small relief uptrend for a while because it dropped all the way to $300. HNST, Honest, Etsy, Hood, Corsair, SoFi, Skills, Taruchev, Dropbox. I bought a lot of those stocks, by the way, Friday night, 10 minutes before the close, because everything was so beaten down that I expected to basically move up this week so I can sell for a small profit. Pepsi, Starbucks, let's even open Mondelez. Okay, so let's go ahead and see what's up pre-market. We have here, starting with Costco 531. Costco is very overvalued in this PE, but it seems like it's holding strong above 500 for now. We will read the article about the upcoming Costco earnings in a while. Foot Locker trying to recover a bit. Its market cap dropped to 4.5 billion, and it has a PE of 5, one of the lowest PEs right now in the stock market. Intel, PE of 9.5. This seems better for Intel. I prefer Intel below 9. Back. Tell me if everything is alright with the live. Tell me if you can watch without any problems and it's not lagging, just so I know what's up. We had 5 to 7 viewers. We have a view right now. Intel right now is at 49.30 per share pre-market. Let's move on. Alphabet is at 28.44 pre-market, so it seems flat. Apple is still up though, 1%. Alibaba trying to recover a bit. I'll probably DCA into Alibaba as with the market open. Those prices are a steal deal, so I can't avoid that. Nvidia. Nvidia dropped below 300. That's interesting. I wonder why that is. Maybe because it's so overvalued and he has a PE of 100, maybe. Anyway, let's move on. AMD 141.8. AMD 141.8 pre-market. So the semiconductor stocks are dropping, but the high growth, high margin semiconductor stocks are dropping, but Intel, which is more of a value play, is staying flat. That's interesting. Costco, we already talked about Costco. Meta Platforms, 300. Meta and Facebook is absolutely flat. Tencent has opened at $56, same. MicroStrategy has dropped a lot because Bitcoin dropped a lot, so it's obvious like those two go together. Palantir below $20. Many people are very interested in Palantir below $20, and it's dropping even more. It seems like it's dropping even more. The 52-week low is $17. It will be very interesting if it gets to $17, and I might be. It's attractive at $70. Palantir is attractive because it can easily get to like above $60 over the next 3 to 4 years. But it's too. I find it hard to invest in stocks like this, high-flying stocks, growth stocks that are kind of speculative as well. I find it hard because it already has a 38 billion market cap. Anyway, let's move on. Honest, I like Honest. I bought Honest Friday night too. I increased my position, and I'll probably hold Honest for a long time unless I decide to trade it because I see a small change in the market and what's going on in the market. Tell me, by the way, if I'm lagging or if you can hear me well. I would really appreciate that. Etsy 22.29. I would definitely start a position on Etsy at $200 per share or below. That would be very interesting. Let's move on. Robinhood 21.30. Robinhood is at 21.30, dropping even more as the market opens. I wonder if it keeps going lower, if it keeps being negative, it will probably drop below $20 per share. This will be insane for Robinhood. I bought some Robinhood and I'll buy more at those prices, by the way. I consider it a better short-term investment than Palantir. Short-term. Corsair, flat, basically flat. SoFi, flat. SoFi is really interesting around and attractive at around 14.50, 14.70 per share. That's some good places I would like to see SoFi. Skills, 7.94. Skills is flat. It's a higher risk stock, so that's reasonable. Tarot Chef, absolutely flat, went down 4% Friday. Right now is at 15.15. Dropbox, flat. Those are many growth stocks that the retail investors are interested in. Pepsi, 1% up, almost 1% up. So we see that many value plays or dividend stocks are positive today. Starbucks too, kind of flat to positive. We see many dividend stocks today being kind of positive. That's interesting, and many growth stocks still struggling. Nvidia being down, etc. Anyway, let's go back and check the crypto market. 48.4 for Bitcoin, 4K for Ethereum. Let's go ahead and read some news and check what's up. We have here CoinDesk, and we have Barnes as well. Let me see if the live is going well. You're good, brother. Thank you. Thank you for telling me that I'm okay and I'm not lagging. So we have CoinDesk here, and let's open Barnes and check some news. Barnes is a newsletter, a stock newsletter that I really like. The jobs report was muddled. The Fed's plan remains clear. So the Fed's plan remains clear that they want to hike the interest rates and increase them, but until they do that, it will probably take some time. Jerome Powell came the other week and was totally changed his position from 1 week to the other after he got renominated, but he still hasn't done anything. He only said that he will raise interest rates. Until he does that, what he said was just a threat. So I prefer to wait until they do something and not pay so much attention on what the Fed says, just so you know. I think this is something you should keep in your mind. But anyway, this is a long read. This is a 6-minute read, so I don't think it's really worth reading. The unemployment rate down to 4.2% in November, just barely above what the Federal Reserve estimates as a natural rate of unemployment, or the unemployment rate at which inflation remains stable. More importantly, about 600,000 people returned to the labor force. Okay, no one cares. Participation pickup, no one cares. Whatever, let's read something else. This is boring. The Fed scares the stock market more than COVID. That's true. That's what I'm saying. They just keep putting those threats out there, and the market adjusts, but they don't do anything the same time that they threaten the market. Fed faces another conundrum. Bonds aren't following its lead. Powell changed his tone, not his game. Time to stop panicking. Why the jobs report is so badly? Investors are scared how to profit from fear. Buyers are staying away from Bitcoin, Ethereum. Alibaba stock falls in Hong Kong as e-commerce giant takes up management. Oh, this is a new story. That's not interesting about Alibaba. If you're not a fan of Chinese stocks, you can't avoid the fact that they are so cheap. It makes me interact with it. I can't wait them. Anyway, this stock this will be a switch so we can get it. Can't force it. Not last week on Black Friday. The online doesn't seem to have no index. It's not the latest. But anyway, everything's large. You got a new subscriber, so thank you much. So it's additional. Everything like for some reason. Let's check the stock, not the stock prices, the crypto market prices, because the stock market is still closed and it's about to open in 30 minutes. Bitcoin right now is at 48.5k, Ethereum is at 4k, Binance Coin is at 557. So let's read this below. The Fed faces another conundrum. The bond market isn't complete. Bond while channeling good and inflation is being more like Greenspan, facing a conundrum if the bond market fails to follow the Federal Reserve's lead to the line of the bank. After being nominated for a second 4-year term, told Congress transitory modifier to describe inflation should be retired. He said that the transitory term to be stated that the Federal Open Market Committee, the FOMC, could discuss up the price of its tapering of securities purchases. So every month they are printing money and they're buying a ton of securities and a ton of mortgage-backed securities. As its confab a month ago, the policy setting panel said it would trim its monthly buying by 15 billion, reducing it to 105 billion. So they are still printing 105 billion. Far from abruptly taking away the monetary balance wall, the central bank will be slowing its core on balance sheet at 8.6 trillion. The bank spreads shall be done. But ending its bond buying policy, raising its federal funds rate. The only surprise of a quicker taper was not surprised, given it was previously by the senior Fed officials. If anything, winding up the Fed's mass banking of the extreme emergency measures put in place during the worst of the financial and economic crisis triggered by the pandemic in March 2020. Robert Powell's congressional inquisitors let him know that conditions stop concern. A lot of people are concerned because the price is going up, the inflation keeps on going. Just how inappropriate current Fed policy is in the context of the robust and inflationary economy is evident in the record gap between the gross domestic product growth rate and the 10-year Treasury, writes Alan Ruskin. Nominal GDP increases, okay? Now, however, nominal GDP is striking down Baxter's 11% growth year over year, while inflation far exceeds the Fed's official target. But the 10-year yield languishes below 1.5%. There has been nothing since the end of World War II. The growth is a result of mass of fiscal elections of 2020 and continuing with the American Rescue Plan this year. The Fed has effectively funded about half resulting deficits by buying approximately $3 trillion of Treasury securities since March 2020. Ruskin adds more than doubling its holding to 5.6 trillion. Combined with the purchase of 1.2 trillion, there are so many trillions around. This is insane. Combined with the purchase of 1.2 trillion securities, the Fed's quantitative easing has stamped down long-term rates. But the long end of the bond market seems to be ignoring the prospect of this QE ending. A poorly understood behavior that appears in part due to technical market bets. Okay, what is that? As the short end of the Treasury market yields on the long end have fallen. The 30-year bond traded late Thursday at 1.7, its lowest level since 1.71, right after the turn of the year. While the 2-year note changed hands at 0.6, just below its high of 0.6. That's before Thanksgiving at the first reports of Omicron. So the fact that the long-term bonds haven't increased shows distrust against the government. Anyway, the fall in long-term interest rates combined with the rise at the short end has produced the flattest slope in the yield curve in years. The slope is very flat, so they didn't go high. Joint Thursday, it's equal to Thursday, the lowest since early January and down sharply on 10 years to 72 basis points. Okay, the lowest on when the Fed. However, these low long-term rates are a major determinant of the long yields move up, the short-term rates. So the less the yields move higher, the more the Fed would have to lift short-term rates to run inflation. The more the Fed. Okay, he concludes. That recalls the period from 2006 when the Fed raised from a post-dot-com crash low of 1% to 5.25%. But longer-term yields failed to respond, a circumstance that Greenspan calls a conundrum, resulting in accommodating financial conditions that inflated massive housing bubble. The market's fear is at Powell at the Health rate steadily raised to nearly 2.5%. Okay, there is also here bearish period. Year's fourth quarter. If the S&P is so early, the S&P drops 20%, people will start suiciding, lose their mind. Even though it's not that funny, it sounds insane. I have never seen a crash that big of 20% on the S&P. What's different this time, according to a research note from JP Morgan Treasury strategist Jay Barry, is that policy is down. The real Fed is about much 4%. It's on the core, the CPI basically, the core personal consumption at the PC, versus almost positive one between the 2 and 10-year notes. Okay, the futures market now looks for the liftoff in the Fed funds rate to begin with a 0.25% target range. The key rate now. Okay. Finally, history shows that after the Fed funds peak, it passes before the stock market is in 2007 after 4.2%. So it actually kept on going up after the in 2018 after 9 increases. Now talks about correction before it becomes very easy to accommodate. That is investors who are now accepting yields far below, which in turn provide them values. Okay, high fly stocks. That's a so let's read something else. To head to work. I like watch you go far. Have a great day. Thank you so much, man. Thank you. That's a nice comment by you. Let's read something else. Well, we have a for sliding for now. And we'll read this actual if we have what's going here. And they are in constructive communication with this, so they don't get read this together. Chinese security is money to the US. That's an interesting listing. The headline understand the point. Recently, individual media reports that Chinese regulators calling PS5 listing for the US is mixed. They're planning to be a one of the Chinese stocks. Actually, going to the value for everyone holds US. Everyone holds US company. PS5. I believe so. Liquidity loss about politicized capital market regulation in recent years, appointed listed in for no apparent reason, and coercing Chinese companies to the list, which is not to the basis of the rule of law, but also damages the interest of global investors and international statutes of the US capital market. This is basically a multi-loss approach. In today's highly globalized capital markets, there is a greater need for regulators to do audit and regulation in a pragmatic and professional manner. Enforcing the delisting of Chinese companies listed in the United States should not be a responsible policy option, the CSRC said. Okay. By the way, the stock market is about to open in 2 minutes, so we'll be there to check the prices of many. For some time now, Chinese regulators have introduced a series of policy measures to promote the regulated development of the platform economy. When on the one hand, the US, the SEC, likes to regulate before things happen, the Chinese regulations happen usually after the company has grown. For example, after China has and Alibaba has reached a point, after Tencent has reached a point, they like to regulate after. When, on the other hand, US likes to regulate before. So they are working in a different way than the US. But every time, for some reason, the US investors like to panic when this is funny. This is really funny actually. So stay with me. When we have regulation on US stocks, you have maybe 1 week, maybe 3 days of panic for a stock. For example, for Google, for Apple, for Facebook, for whatever. You have the panic for like 3 days. When you have a regulation on Chinese stocks, you have panic for 3 months minimum. So if you're willing to invest in Chinese stocks, this is probably something that you will have to deal with throughout time whenever they regulate the market. Anyway, let's move on. The main purpose of which is to regulate monopolistic practices, protect the rights and interests of SMEs and data security and personal information security, and eliminate the vacuum of financial regulation and prevent disorderly expansion of capital, the statement said. In response to these new issues, regulators in various countries are also trying to adopt different regulatory measures to promote a healthier and more sustainable development of the platform economy. Therefore, the policies introduced by the Chinese government are not the separation of specific industries or private enterprises and are not necessarily related to the overseas listing activities. Okay, in implementing the relevant regulatory measures, Chinese regulators will steadfastly promote reform and openness and further